Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Canada is not in a housing bubble, and even if we were, the government wouldn't be able to fix it. This was the message from Evan Siddall, who did an interview on Sunday with CTV News, where he tried to articulate what he sees are the biggest problems with Canada's real estate market. Evan Siddall is the former head of the CMHC, who famously predicted at the beginning of the pandemic that Canadian home prices would drop by 18%. And obviously we all know how well that turned out.
You should never be allowed to talk to people.
In all seriousness, though, as he was the head of one of Canada's largest mortgage insurers, we should take his notes seriously. So what I want to do today is briefly go over what Evan Siddall had to say about the Canadian real estate market, what he thinks is to blame for the housing prices going up, and what he thinks needs to be done to fix it. Siddall did touch on the sacred cow of the principal residence tax, so I definitely want to get into that, as the last time that was brought up in March of this year, it went over really, really well. It made a lot of friends for RBC. We do have the Canadian real estate data coming out any day now, as well as our inflation data coming out next week, which will have a direct impact on the timing of interest rate hikes, which we're going to get into later. But that will have a direct impact on interest rates that we're going to have next year. So click like and subscribe if you want to get those updates. But for now, let's get into this Evan Siddall interview. As mentioned, Evan Siddall noted in the question period on CTV News that Canada is not in a housing bubble, and the main problems lie with supply and demand.
It's supply and demand. It's just that simple. Demand is increasing. It increased during COVID, and supply is constrained. And as when you have supply constrained and demand increasing, prices go up. It's that simple.
And he's not just talking about there's more people than there are houses when he says demand. He's talking about high demand due in large part to the ultra low interest rates that we've had since the beginning of 2020. When money is cheap, demand goes up because it's cheaper to borrow. It's the price of buying houses is much less than when interest rates are much higher. So, because we haven't had that higher amount of supply to correspond with that demand, Evan Siddall is saying that is the reason for our price hikes. Which leads him to his next point that interest rates are definitely, at least partially, to blame for the major rise in real estate prices throughout Canada over the past couple of years.
Is it because of the low interest rates that's driving it?
It's a question. It is for sure low rates.
I mean, yeah, we've talked about this at length on this channel. Many are predicting that as rates go up, the price of our real estate is going to at least cool at very minimum. And this was definitely reflected in this interview, as Siddall is predicting that once we start to see those rates go up, our housing market is going to cool.
Look, interest rates are going to go up. We know that. The governor of the bank was on this program a couple of weeks ago saying, not a lot, but they're going to start incrementally climbing. What impact will that have?
That will slow down demand for housing. It will.
With that said, Evan Siddall does not think that means that our prices are going to crash, as he doesn't believe we're in a bubble. His idea is that because everybody has been stress tested for the past few years, we do have that cushion there.
There's a cushion already in the housing market for the possibility that prices may go up.
The lowest stress test that I've seen was qualifying at a rate of 4.79, with the highest being 5.34. Right now we're at 5.25. So, even if you're paying 2% or you're paying 2.5%, you've been stress tested. You've been shown to be able to make those payments at 4.5%. For that reason, Siddall doesn't think that we're in a housing bubble. But he does say that one, rates are going to cool the market. They will cool down. But two, and he doesn't think that this is a viable option, but his idea is the capital gains tax on your principal residences.
A progressive capital gains tax on principal residences. I think that's a legitimate conversation.
Wow.
You can make $1,000 a year, let's say, on that, but nothing more, and we'll tax above. These are all options that people could explore.
As we noted back in March, RBC came out and said that the government should look at readdressing the sacred cow, almost a third rail in Canadian real estate, in Canadian politics.
Probably said something that made people's hair fall out, which is
Yep.
capital gains on your first home, your residence. For most people, some governments even musing about taxing their...
Political suicide.
It's political suicide.
And look at introducing a capital gains tax on the sale of principal residences. This carries with it all sorts of problems, as so many people consider their principal residence tax their main source of retirement savings. And we've gone over this at length as well. But Siddall did make I have to give it to him. He jumped on the sword again, and he did come out and call for this tax even after all the negative publicity that was garnered by RBC when this came out in March. And all sorts of leaders have jumped on it afterwards, after they came out for that principal residence tax. But I think the biggest takeaways from this video is that Evan Siddall is concurring that interest rates are going to probably slow the market. So that's really where I think we need to have our focus in, and not just because I'm a mortgage broker, and that's really where my focus lies quite often. Just the fact that interest rates, it does look like they are going to be going up as our inflation rate continues to grow. So we need to really keep an eye on that inflation rate and the timing of those interest rate hikes, as that's going to be the biggest indicator as to when we're going to see our house prices slow. Siddall noted that this really isn't a problem that the government can fix.
The government simply cannot contribute enough money in the size of this market to create the supply that's needed. Too much for a government to handle. We're talking trillions of dollars in housing activity, Evan. It's not a supply. It is a supply problem, but it's not a supply problem the government can deal with on its own. It needs private sector support.
The government just doesn't have the money to build adequate supply or to provide enough money to fix this housing market. So it's really a private sector issue. And once rates do go up, that goes right into the private sector issue. That's going to slow down demand by quite a bit. You have to remember, this is a supply and a demand issue. So we may not be able to build houses that quickly, but we can certainly raise rates and slow down that demand very, very quickly. So really, according to Evan Siddall, in 2022, the news is going to be interest rates when it comes to Canadian real estate. And I do have to concur with him, at least somewhat, that interest rates are going to be the name of the game as we move on to 2022's real estate market. And I mean, that's all things being equal. If the government is able to raise interest rates, obviously Omicron, we still don't know a whole lot about it. And we're waiting to see whether or not we're heading backwards in the game. Hopefully not. Hopefully the majority of this is behind us. But from what the banks are saying and from what Evan Siddall is saying, all things being equal, we should be looking forward to, not looking forward to them. It's not exciting news that we're going to pay more to borrow money, but we should prepare ourselves, I suppose. We should be preparing for higher interest rates in the future, and that we should be, and that is going to have a very big cooling effect on Canada's real estate market. But like we said, we are going to have more data out on Canada's real estate this week, hopefully, maybe early next week, and then next week on Wednesday, I think it is, we do have those inflation numbers coming out, which are going to be a big deal. Bank of Canada is predicting 5%. We'll see what happens. If you want to get those updates, make sure you click like and subscribe. But for now, thanks so much for watching.